Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, July 2nd, 2019, and we are now in the final hour of the trading day. As you know, in my opinion, the prices, as close as you can get them to the close of the day, are the most valid prices, and therefore those are the prices that I make the majority of my buying and selling decisions from. So anyway, hope everyone's doing well today, enjoying your July so far. All right, let me just make sure that everyone can hear me and we're all set up that way. Can everyone hear me okay? All right. All right. Well, let's get down to business. So, all right. So listen, here is the format for today. First of all, we're going to go ahead and we're going to run the U.S. legal disclaimer. And then after that, we are going to come back and we are going to take a look at my current positions. And we're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward. Then we're going to talk a little bit about investor psychology for a few minutes, and then we're going to get on to my watch list. And we're going to go down through my watch list. We're going to take a look at each stock. We're going to analyze it using support, resistance levels, moving averages, ATR channels, RSI, entry triggers, all the stuff that we do. And I'll be explaining things as we go along. And then if I find anything, I'm going to mark them as potentials. And then near the close of the market, we're going to narrow those down and try to take only the best trades. So, and then after that, after the market closes, if you have any questions about what I went over today, if you're not clear on something, please don't be shy. Just go ahead and ask me and I'll try to clarify it for you. And then also, if you have any stocks that you would like me to look at, anything that you're looking at, if you'd like my opinion, I'm happy to give it to you. So that's the plan for today. So I'm going to go ahead and run the U.S. legal disclaimer. I'll be back in about 40 seconds, so please hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay. Hey Andy, how you doing? Hey, it's good to see you. Thank you for coming by. I always appreciate it, my friend. Thank you so much. All right, well, let's get to it. Let's take a look at my current positions, why I got in them, or when I got in them, why I got in them, how I'm going to manage them moving forward. And then if there are any previous trades while we're looking at this chart, we'll go over those as well, just to kind of go over the same thing, why I got in them, how I managed them going forward, and when I exited them. So, all right, let's first start with Goldman Sachs. So, I did buy Goldman Sachs on the 27th of June, and the reason I bought it, a couple reasons. One, we closed below the 200 the previous day. We closed back above the 200 the next day. That is one reason. Being long over the 200 is a good approach. Staying out under the 200 in most cases is a pretty good policy. So we went under, we went over, and then we took out this previous fractal. See this high over here with two lower highs to the left, two lower highs to the right. So that is the reason that I entered this trade. Triggered the fractal, closed, and then the day before it closed under the 200, back over the 200. At the same time, MACD was positive. RSI was in a good area, somewhere between 50, 60, and those are my parameters. So that is the reason that I bought it. You can see the next day it gapped way up for us, had a really nice day on that. I hit 3 profit targets on that next day up about 36%. Yesterday, I hit 2 profit targets again as it moved up again. So out of about 55-60% of the position at this point, my trailing stop now, see this blue line? This is the 70 RSI as of yesterday at the close. So I am going to be exiting this position because we went from a reading of over 70, under 70. So it wasn't able to hold up there in the 70 RSI range. You know, it's difficult, not impossible, but it's difficult for stocks to get up to that 70 RSI reading. Sometimes they can go close above and really go parabolic, but in this case, it tested these levels up here. The market didn't like it. So unless we, for some reason, close back over the 70 RSI, I'll just go ahead and exit this trade for a really, really nice gain. So yeah, 2.86%. But again, we did hit 2 profit targets up higher. That's why I like phasing out. I like to take something when the market gives it to me, and kind of an added benefit, if you phase out like I do, you are always going to hit some prices near the high of the move. Just by default, you're going to. And you know, if you'd like to learn more about my phasing out process, I do have a video in my YouTube channel. It's under the lesson playlist, and I'll get a link for you here in a minute. Well, let's just go. Why don't we just go ahead and do it right now? All right, so I'm just going to put this here in the chat. So that's the link to my lesson video on phasing out if you'd like more information about that. Just give me 1 second and I'll tell you exactly. Oh, sorry. All right. Yeah, there's a bunch of lessons under channel introduction and lesson videos on my YouTube channel. There's lots of different lessons. You know, if you're not quite sure you have this down as far as during the live stream, watch those lessons because I go over, you know, individually, you know, my different types of setups, the V1, V2 entries, phasing out. So there's a lot of good information there. So if you have some time, do yourself a favor. It's under the playlist channel introduction and lesson videos. And if you have any questions about any of that, when you watch them, feel free. You can always send me a message on Twitter, and my email is also in the description of this video. So, hey, Frederick, how you doing? Good to see you, my friend. Hey, I did get your chart that you emailed me, and I will be going over that after the close of the market, okay? All right. Hope everything's going well in France. Okay. So that's Goldman Sachs. The close under 70, that was my trigger to exit the trade, lock in these profits. So thank you, Goldman Sachs. All right, IWM. So I did take a long position on IWM back here on the 28th of June. And the reason that I took this trade, this is a really good back-tested approach to trading the Russell 2000. And the reason the trigger happens when the 10 EMA, which is the pink line, crosses over the 50, the 10 SMA closes over the 50 SMA. That's a really good long tested approach. Let me show you real quick. And I am using etfreplay.com, which I use for my back test. It's a really good program, and I subscribe to it, but I can run all sorts of different back tests. But you can see, taking the signal when the 10 SMA crosses over the 50 SMA on the IWM, since 2000, the return has been 321%, and the drawdown was only 21.7%. Buying and holding was 280.5, and the drawdown on buying and holding was 58.6. So it beat both on the return, and it beat also on the smaller drawdown. So that is the reason that I took this trade. I did take it here on June 28th. I took a half position just because of the context of the chart. Yesterday it gapped up. We took 2 profit targets, which I'm grateful for. We got rid of about 20% of the trade. Today it has gone back down. I'm trading this mechanically like a robot, meaning that I'm going to stay in this trade until one of 2 things happen. One, the 10 crosses back under the 50. That will be my signal to get out of the trade. Or if it continues to move up, I will continue to phase out of shares until I'm completely out of the position. So that's the plan. It's a really good back-tested system, as you can see. The win rate is actually 53.4%. That's pretty high. And it has, the medium win is 5.82. The medium loss is 2.79. So it's a good asymmetrical win to loss payout. And so that is the plan. That is the plan on IWM, but it is down today. From another technical standpoint, we did break out to a new high here, and today we've gone back down. So technically this is a false breakout to the downside, which is not a good sign. But again, my trading encompasses discretionary trades where I can just get out of something where I want to, and mechanical robot trades where I stay in them. And then this is one of those particular type of trades. So if the 10 crosses below the 50, I'm out. If it continues to move up, I'll stay in until I am out of shares. Coca-Cola. So I did buy Coca-Cola yesterday here at 51.20. And so why did I buy Coca-Cola? Well, something I call a V1, V2 entry setup. So here we have a high. We came back down into the value zone. Now the value zone are the green lines. Here, that's the +1 ATR channel. Down here, this other green line, that's the -1 ATR channel. So anytime the price is within this channel, I consider that the value zone. When it's above the channel, I consider it overvalued. When it's below the channel, I consider it undervalued. But the point is here is that, we made a high, we came back into the value zone, we immediately bounced, we made a new high, took out the previous high, then we came back down to the value zone, which is normal. That is what people, that is normal for a stock to go above value, back into value, under value, back up to value. So we made a higher high here, we came down into value. Here we started to move sideways, so we did find some support. There was less supply coming into the market. The next day it spiked down. The market tested these prices down here. It did not like them, and the next day it rallied back up after testing these prices. I bought this one intraday here at 51.20 when it went above the signal line of day 1. So here's day 1, day 2, day 3. Day 2 washes out day 1. That's a requirement. And day 3 goes above day 1. I bought this intraday. You could have also bought it at the end of the day. But in this particular case, I did get a better fill at 51.20 because I bought it intraday. As you can see, it moved up nicely since the entry yesterday. Today, it continued to go up higher. I did hit one profit target up here for about, call it 10% of my position size that I took off. Because again, I like to phase out. I like to take a portion of my position off as it moves my way. It's just a principle that I use in trading, is when the market gives you something, take a little something. So you can see we did hit a profit target higher than it is today. With this particular trade now, again, one of two things will happen. We'll continue up, until I run out of shares, or if I hit the 70 RSI and reject, that will also be another reason for me to exit the trade. To the downside, I will probably go ahead and use the 10-day moving average here. This is the pink line as my trailing stop. So I don't want to guess and think, okay, it's at the top. I just want to let the prices tell me what to do. If it keeps moving up, great. I'll just continue to move up regardless of what I think, because what I think does not matter. I might think today, well, this is probably it. I should get out, but I don't know that. So I'm going to get out to the upside, phasing out if it continues, or if the market now comes down, closes below the 10-day moving average, which is about halfway of this big bar here, yesterday's bar, that will be my signal to get out. If it continues to move up, I'll probably start using the 5-day as my trailing stop, or possibly if it moves up, I will use a close below the previous day's low. So that is the plan with Coca-Cola, but it has been a good profitable trade. All right. Next one, what do we have up on deck here? All right, PayPal. All right, well, similar to Coca-Cola, I bought this for the same reason. You can see here's the green line, here's the green line. This is the value zone. Ideally, I like to make most of my buys within the value zone. So here we make a higher high, we come back down into value, which is normal. It starts to move sideways. There's no more supply coming in, which is good. It shows that there's some stability. And then this day here washes out the previous day's low. So it moved up, moved down, started to move sideways. We had a spike down. The market was testing these prices, couldn't find any more sellers. And then the next day, it closed above day one's close. This is day one, day two, day three. Day two washes out day one. Day three closes above day one. And that was my entry point back here on June 28th at 114.59. The next day, it gapped up strongly, hit some profit targets yesterday on the gap up. And then today, it has moved up again. I did hit one profit target. So going forward, how am I going to manage this trade? Well, this was my washout bar. Day one, day two, day three. Day two washes out day one. I'm going to use a close right currently if we close below this line, which is halfway of this washout bar. That will be my initial stop. If it continues to move up, I'll continue to phase out. If it starts extending further and further away from my entry point, I will start using a trailing stop, probably a close below the previous day's low. The blue line up here, this is the 70 RSI. If we get up to that point, test it and fail, that will also be a signal for me to get out of the position. So I hope that makes sense. But it has been a profitable trade so far. Obviously, we bought it here at 114.59. So the key here is let this thing run. If it's going to run, if it comes back down and we have a loss on this, immediately get out, keep those losses small, let those winners run. All right. Frederick says, okay, great. Many storm at my place by now, so need to cut off internet a lot. What's the weather in your place? Hot. Yeah, it is hot here. It's getting hot here. Not as hot as like Dr. Jorgensen right here in Phoenix, because I live in Utah. But John, hi. John, how you doing? Thanks for coming. What are the settings for UOUE for ATR? Well, I'm not quite sure where you're asking, John, but my ATR settings are based upon, they're all based upon 20 days. And then we have standard deviations. So 6 standard deviations, because I have 6 ATR channels to the top, 6 ATR channels to the bottom, but the settings are based upon the 20-day. So maybe we can get into this a little bit more after the market closes, just to make sure I have enough time to get through everything. But I'll try to answer that after, because I want to answer that question for you. Dr. Jordan says, hope everyone's drinking their Coke today. Switch from your weed to Coke this week. Help out the stock. That's right. Let's help out Coca-Cola. Frederick, very hot at your place. Big warm weather in France. Hey, Mount Doji. How you doing, buddy? Good to see you. He says hello and he's watching the Women's Cup. Dr. Jorgensen, keep an eye on the ladies, Mount Doji. All right. Okay, so next position, SPY. So I believe this is a bad tick today on my charting. I do not recall the market going down this much, but as many of you know, but in case we have some new viewers today, I do buy the SPY. It is just one of my trades that I do, but I do this one every day. I buy the SPY at the close. I sell it first thing in the morning the next day. And so why do I do that? So this is based on a study from @Bespoke Invest. This was shared by Liz Ann Saunders. She's actually the chief investment officer at Charles Schwab. But since 1993, if you would have bought the SPY on the open in the morning, sold it in the afternoon, on the close each day, you would have actually returned negative 5.2%. But if you did the opposite and you bought at the close and you sold the very first thing the next morning, you would have actually returned 568%, meaning that more than all performance in the S&P came in after hours trading. That's people bidding it up in the aftermarket and people bidding it up in the pre-market and selling it into the open. And so this was based from 93 to 2017. This is more recent. This was from 93 to 2019, buying at the open, selling at the close. At this point would have returned actually a negative 13.9%. Doing the opposite, buying it at the close, selling in the morning, would have returned 634.2%. And Stephen Burns, who is a friend of mine, a great mentor, great trader, great author, he did a more recent study up until about, I guess, 10, 11 days ago. And his results from 1993, the buy on the close, sell on the open, actually returned 712.63%. So you can see it's a very powerful study. It really shows that the majority of the gains in the market come in the after hours and the pre-market. So just the fact that you're holding stocks overnight really is an edge for you. I know there are some day traders that do well, but it's clear that the majority of the moves do not come intraday, they come after. So that being said, I did buy S&P yesterday at 295.46 and I sold it for 295.56 this morning. So very small win, but you can see the buy on Friday, buying it here at about 292.97. Yesterday sold it at like 296.56. So I've been using this since February 26th of this year, and it has been a very nice profitable system. So I will continue to use this long-term every day, just like a long-term trade that I have to get in and out of each day to take advantage of that overnight edge. So, it's important. This does have drawdowns. It can have serious drawdowns. You can see over the years, it's had some just straight ups, but then it's had some pullbacks, ups, pullbacks, ups, pullbacks. But in the long term, it really has performed well. So make sure you're using proper position sizing so that if you do use this and you run into a drawdown, you're able to hang in there and let the long-term statistics work for you. All right. And then TLT. All right, so TLT, I had a lot of hope for this trade, and so it's a good point to make here that regardless of how good the setup is, you don't know if it's going to work or not. So it's important to, even if you feel great about something, that you still position size correctly. And I did feel great about this trade. We had a high, we had a pullback, we made a higher high, we had a MACD divergence, meaning that the bars on the first move were very strong. The bars on the second move were actually non-existent. This shows that it's weak. It did come down. My plan was to sell the first lower high rally that formed, and so I did sell it here. Here was a second high. We pulled back. We tried to go back up. We failed. This makes a lower high. So I sold it short right here at 131.91. Immediately reversed on me, but it did keep me in the trade because it did not close above my stop, which was halfway the washout bar, 132.92. Next day, it also tested that area, failed, so it kept it. Yesterday, it went my way, took two profit targets, actually hit one profit target here, and then hit two there, getting me out of about 36%. Today, it looks clear that it's going to close above my stop, so I will be getting out of this and taking a small loss. But again, I did hit some profit targets on the way down, so it mitigates my loss when it goes back above me. Goes back above my stop. So that is the plan. So real quick, Goldman Sachs closes under 30. I'm going to exit that today. IWM, this is a mechanical trade. I am holding this until the 10 crosses below the 50. Coca-Cola went our way, hit a profit target. PayPal hit a profit target. SPY, small gain, and TLT, that was the loss there. So all in all today, very, very slight small loss. We had a great day yesterday, but today's a small loss. But remember, small losses are acceptable. Big wins are acceptable. Small wins are acceptable. Scratch trades are acceptable. Small losses are acceptable, but you just cannot have large losses if you want to make money long-term in trading. So that's the formula for success. All right. Dr. Jorgensen says, those SPY pennies keep adding up, better than a loss. Absolutely, 100%. 100%. All right. So real quick, I did want to show you something that I read here. This is from @AlphaMind101 from Stephen Goldstein. He posts good information, so you might want to check out that channel @AlphaMind101. But he posted this from one of my trading clients. The art of trading is learning to sit around and do nothing. When everything in your mind screams at you to do something, balanced with having the guts to do something when everyone in your mind screams at you to do nothing. And so this really resonated with me, because sometimes my mind is screaming, do something, do something. And usually it's when something's going my way. You know, my personality is, oh, I don't want to give that back, right? But really that's when you need to that's really when you need to sit on your hands and do nothing, because that was your trading plan, right? And then the other side of this, balance with the guts to do something when everything in your mind screams at you to do nothing. What comes to mind for me are buying dips. You know, you look at dips in the, in the rear view mirror and you're like, oh yeah, I wish I would have bought there. But dips are always scary in real time, right? You don't feel real comfortable buying those dips, but as our back tests show, it is a good procedure to go ahead and buy those dips when your technicals line up. But emotionally, it's hard to do. So, I have to go in and actually get off my hands and pull the trigger. So that's what he's saying. The art of trading is learning to sit around and do nothing. When everything in your mind screams at you to do something, so don't do anything when you're not supposed to. Balance with the guts to have the guts to do something when everything in your mind screams at you to do nothing. So the other side of that is doing something when you don't want to do it. But I thought that was good, and so I wanted to share that. And again, this is Stephen Goldstein @AlphaMind101. All right, well, let's go down through our list and see if there's anything that looks interesting for us today. right, so Apple is up Apple's up buck today. It is holding its new range to the upside. It did break out yesterday, came back, tested that previous support, which used to be resistance, did hold. It's hanging in there. So nothing for me today right now at the 64 RSI, but good to see that Apple's holding its higher range here. Advanced micro devices. Did come back into the value range. It's hanging out into the value range, but nothing really for me here. I did sell a put to $24 on advanced micro devices, and I'll tell you real quick why. I like the $24 mark on the monthly, which happened to be in the value zone. On the weekly, when I sold the put, it lined up nicely with the 50-week moving average and the -1 moving average, or the -1 ATR channel, showing that it should have some support here. Doesn't mean it's going to, but that, you know, it's a good possibility that that $24 mark lines up there. And then on the daily, the $24 mark was down here at the 30 RSI. So across all three time frames, I did like the $24 mark. So I did go ahead and sell it. Meaning that if the prices did not come back down to here by expiration, I would keep all the blanked my mind, premium. So I did get out of this trade yesterday. I locked in about 80% of the premium, and so when I get 80% of my premium in the first half of the holding period, I'll just go ahead and take it. So that was a good trade, but nothing on micro devices today. Amazon. Moving sidewards here. Nothing there for me today. Boeing has lost its 200-day moving average, which is significant because there are buyers that come in at the 200-day, but that's why you'll get a lot of bounces at the 200-day. But if the market actually closes under the 200-day, it shows that even the buyers at the 200 were not strong enough to keep it there. So nothing on Boeing. Alibaba, you know, I was looking at buying Alibaba here over the 200, but a couple days later we had the Fed meeting, so I decided just to pass on the trade. As you can see, it has moved up nicely since then. And by the way, we did close under the 200, back over the 200, and we did trigger the fractal, and the fractal's the high with the two lower highs to the left, two lower highs to the right. So that did work out, but unfortunately I didn't get this trade because of the Fed meeting announcement. But it is moving nicely. So if any of you have Alibaba, hope that keeps moving up for you. Caterpillar had that nice break above the 200-day moving average. I didn't take it. The RSI was a little high, but nonetheless it continued to move up. I'd like to see this pull back into possibly another test of the 200, because right now the 200 is within the 1 and -1 ATR channel. So nothing on Canopy today. I'm sorry, on Caterpillar today. Canopy Growth. You know, we did have a bottom here. We had another bottom here. The MACD bars very deep here. The MACD bars were non-existent here. So this technically is a double bottom with a bullish divergence. I learned this with studying one-on-one with Dr. Alexander Elder. He feels that the double bottoms with the bullish divergences or the bearish divergences are some of the strongest signals in technical analysis. But what we had is we did bounce right there, didn't we? Now we've come back down. So I'm looking at this as a possible higher low V2 for tomorrow. So here's day one. Day two washes out day one. If tomorrow we can close above day one's close, I may enter there, but nothing today. Cisco. Well, it moved higher, came back down in the value zone. It is moving sideways, but really I would need some kind of V1 or V2 to get entered here. I mean, it is above the moving averages now. It is above 50, which that is good. I just don't like that the range from here to here, we're getting close to that 50% range. So I'm going to pass on Cisco. DDM, we did make a lower high yesterday. we're just too high. We're in the 65.91 RSI range. It's just too high. I really like to buy between the 50-60 RSI range, targeting the 70. So nothing there today. This is a previous trade we took back here on June 6th. We closed back above the 200-day, holding the DDM above the 200-day and staying in it until it closes back under the 200-day and then getting out. That is a good long-term back-tested system for DDM. It's a mechanical system like a robot. I did buy it here on the signal when we closed under and then back over. I bought it here on the 6th of June. As you can see, it moved nicely. I phased out, moved sideways. I phased out. Right up to here. So it was a really nice, profitable trade. Got out here right about the high, but nothing today. Walt Disney, we did make a higher high. We did come back into the value zone. We technically made a V1 back here on the 28th of June. I didn't take this trade because this bar is larger than 1 ATR, but it technically is a V1. Would have worked out, but I didn't take it because of this bar. So I like to have smaller bars, so I know there's not as much supply coming in just recently before my entry. So nothing there today, but it is moving nicely. I did take it back here on the 3rd of June when we had a nice V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. We also reject the channel, which is another good sign. Closed above 50 RSI, and this was a really nice trade that we took from here, phased out right up to about here. Etsy, nothing really on Etsy. Ford, well, yesterday, we actually 2 days ago, we broke up into a new range, and then yesterday we came back down, closed back into the old range. Looks like we did catch support here at the 50 moving average and the 10, but I would not buy this here. I do not want to get in front of a big bar like that. So nothing on Ford. Facebook. Nothing there. It had this nice move up. It's moved sideways. It's testing the 3rd ATR channel. You've heard me say it many times, but about 90% of all prices stay between the 3rd ATR channel and the negative 3rd ATR channel. So, it's kind of up into that point where most of the time, not all the time, that it's going to run out of gas and the rubber band gets stretched a little bit. So nothing on Facebook. Five Below, nothing here. I did mention yesterday that I would not take this trade even though it went under the 200 and back over the 200, because at some point it hit the 50 RSI and got rejected. And ideally I would have liked to take the trade right above the 200, and my profit target would be about here. So I'm not going to enter into a trade where on the day that I'm thinking about entering it, it already hit my profit target, right? And as you can see, that was a good move because it immediately reversed back down. So, if this closes under the 200-day and maybe back over the 200-day again, I might be interested in taking it there because I'd have a better risk to reward ratio. Gold's having a big day today, as you can see. I have been waiting for a dip, but I was looking for a dip inside the ATR channel. Didn't quite get there today. This is a V2 technically. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 is closing above. Excuse me, but I'm not going to buy this up in this high range. I prefer to buy it in the value zone like we did back here on May 30th. We had a fractal. Here's the high, 2 lower highs to the left, 2 lower highs to the right. We took out the fractal. On top of that, we had a 520 EMA crossover. So a lot of signals here. And we did get in here and we did phase out all the way up to about here. All right, Google. So Google does look interesting today, and let me show you why. We were looking at this yesterday, 10:30. So this is a good back-tested moving average approach with Google using the 10 simple moving average and the 30 simple moving average, entering your positions when the 10 crosses over the 30 as your entry, exiting when the 10 crosses back below the 30. So you can see the results. Buy and hold, using this approach since 2000 returned 1,012.9%. Buy and hold did return more, but not that much, 1,087.9. But the big key difference here is the drawdown on this approach was only 28.1%. The drawdown on the buy and hold was more than double. So looks like today, you can see the 10-day is at 1099.90. The 30 is 1098.47. So I will be entering this trade today as long as the 10 closes above the 30. Now, on some of my other moving average crossover systems, I'm trading them mechanically. I'm trading them like a robot. Not so on Google. And the difference is Google is the stock where the other ones are indexes. If you trade a stock with a long-term moving average crossover system, you're going to hold through earnings, which I do not do that. I do not allow that for myself. So I will be entering Google today because of this crossover, but then I will be switching it to discretion trade moving forward from there. Like, let's say we buy it today. Let's say it moves up nicely over the 200 and then comes back down and loses 200. Then I will go ahead and get out because it's a discretionary trade. If I was trading it like a robot, then I would not. So I hope that makes sense. So I will be buying Google at the end of the day based upon the 1030 SMA cross. All right. Goldman Sachs, we talked about that. We have this. I will be exiting for a nice profit today with a close under 30. IBB, nothing quite there. Intel, boy, the price did not like the prices above the 200-day and failed strongly. Basically break even today. So, in order for me to get interested in Google again, I would probably have to have a close back above the 200. IWM, we talked about this. This is one of the mechanical robot trades that I am taking with the 10 based upon the 1050 moving average. So this is going to be a little bit longer term one. Coca-Cola is working nicely for us. We did hit one profit target. Lockheed Martin is strong. You can see this was the previous high. This is going to act as resistance. We broke above it. See how we've held it on a closing basis? We tested it 1, 2, 3, 4 times underneath this old range, back into the old range. Prices didn't like it, and it has moved up strongly. So it looks like it's at 70 RSI. It'd be interesting to see if it goes higher from there. But if any of you have Lockheed Martin, congratulations. That's a really good trade. MasterCard is doing well today. Interesting. So, nothing on MasterCard today for me, but we did have 2 nice trades on MasterCard recently. I did short MasterCard back here on the 10th. And the reason I did was because intraday we hit the 70 RSI, we closed under the 70 RSI. And on top of that, we were above the third ATR channel. We closed below third ATR channel. So that was my short signal. As you can see, it did move nicely down. I did cover the trade here on the 18th of June, and then we switched long the next day. And why did we do that? Well, we made a higher high. We came back down. We started to move sidewards. Here's day 1. Here's day 2. Here's day 3. Day 2 washes out day 1 by a quarter ATR. Day 3 closes above day 1's close. And so we bought it here. We hit 3 profit targets the very next day. Moved sidewards, hit 1 more profit target, and then it dumped on us and got out of the trade. But it was still a really nice profitable trade because we got out of about close to 50% of our position up here. It did come back into the value zone So that catches my eye again to look for an entry, but there was no V1 or V2. And sometimes, you come into the value zone, you don't get an entry, and it just keeps moving up. And that's just how it goes. There's going to be a lot of those, right? You just have to be happy with the ones that you do get. 3M, nothing really on 3M today. Merck, here's one of those ones where we did make a higher high. We came back into the value zone. I guess this technically is a V1. I did not take it here. I wanted a couple more days of sidewards movement, but this has moved nicely as well. So nothing on Merck. Microsoft, really nothing on Microsoft today. Netflix has been moving nicely, but there's really nothing I can see there as a possible setup. Nike has kind of been all over the place, under the 100, above the 100, tested the 100, so nothing on Nike. Philip Morris having a big day today. I did buy Philip Morris here based upon a V2. Got out of, I think, 3 profit targets up here, and then it lost to 50 and we got out. But this was a nice 2-3 day trade. Has moved sidewards, but it is moving strongly today. If it closes above the 200, I may have an interest in Philip Morris. PayPal we talked about that with the move back into value, the V1, V2 back over. The Qs, nothing on the Qs today, but I did buy the Qs back here on the 4th of June when we closed under the 200, back over the 200. At the same time, we closed under the third ATR channel, back over the third ATR channel, and we had a V2. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1, and that was my entry, and phased out all the way up, moved sideways for a little bit, phased out a little bit more sideways, and yesterday I got out of the full position, but that was a monster trade. Do not have Qs anymore, but that was a great trade. Silver, so silver did make a new high here. It has come back down into the value zone. Technically, this is a V1. Here is day 1, day 2. Day 2 washes out day 1. But I'm not going to take anything here. Because my trade, if I buy it here, will be above the 1 ATR channel. So it's a little high for me. S&P, we talked about that with the buy in the afternoons, sell in the morning. So I will be buying this at the end of the day. Square did close above the 200 a couple days ago. It's continuing to hold above the 200. If you get a close above the 200 and it continues to hold above the 200, that's a good sign. If you buy above the 200, immediately goes back down, not such a great sign. But I'm not going to buy it here. It's a 60.97, so almost a 61 RSI, and it does have the previous highs over here as resistance, so I'm going to pass on Square. SSO, so this is the double leverage SPY. Technically did break out to a new high yesterday. Looks like we've come back down. We're still not as high as a previous high. Nothing here for me, but this is a good place to point out dip buying. We talked about dip buying earlier, but I did buy SSO back here on the 3rd of June. And why did I buy it? For 2 reasons. At one point during the day, we were under 30 RSI. Then we closed back above 30 RSI. We were under the 3rd ATR channel. We closed above the 3rd ATR channel. And as you can see, that was my entry. It's been a really nice trade. I bought it here. I phased out all the way to about here, but a wonderful trade. Did I know it was going to do that? No, I did not. But I did know that the market told me in the same day that it just tested those levels, didn't like it. If it had turned back around the next day, I would have just gotten out with a small loss. But that's the key to trading. Put yourself in a position where, likely the market's telling you that recent prices were not desired by the market. They were too low. There were no sellers down there. Enter the position. If you're wrong, get out quickly. If you're right, sit on your hands and let it go up, just like I said from that previous Twitter post. Did I want to sell about every day? Yes, I did. Did I? No, I didn't, because I sat on my hands and I let it work the way it was supposed to. AT&T has had a nice move up, nothing there. This is the short bond position. This is a losing trade. I'll be exiting this today. Tesla has just kind of been moving sideways here. Really nothing on Tesla. Nothing on natural gas. Boy, oh boy, oil had a big down day today. Rejected that 200-day. So yeah, nothing on oil at the moment. The dollar, the dollar really went down, had a strong move up yesterday. Not really going to do anything with the dollar here. Visa having another strong day up today. VIX, big down day yesterday. If you remember, yes, I did buy a quarter position here because of the Trump trade talks. Only a quarter. Yesterday, it went down. If it had held above the third ATR channel, I would have kept it, but it did close below, so I did exit here, and good thing that I exited here. Keep in mind, we're at a 29.68 RSI right now. If that closes back above 30 RSI, I may enter a position because we're intraday, we're under 30, closing back over, just how I showed you on SSO. Intraday under 30, closing back above. So if it does close back above on an intraday basis, I will go ahead and take a half position here because it's under the 200-day. So we'll have to watch that at the end of the day because it's close. Verizon. Okay, so listen, here you make a new high, you come back into the value zone, you do move sidewards, you spike down, and you reverse back up and create and trigger a V2 entry. So this is a V2 entry. The only thing I don't like about it here, folks, is that it did gap. Gaps are not desirable on the trigger day, on the trigger bar. Even with that said, I am going to go ahead, I'm going to take a half position in Verizon. One, because of the gap, and two, because it's such a big bar. I may enter my second half position if we can, tomorrow or in coming days, we get down a little closer here. It's not that I'm averaging down, it's the intent of the trade. The intent is taking a half. If it keeps moving my way, fine. If it comes back down, I'll just enter my regular full position because I'm taking half to begin with. If I took a full position here and then it came back down and I added another full position, that's adding to a loser. But my intent of the trade is to only take half and possibly get my full position later at a better price. So yeah, Verizon does look pretty good here for a half position. Energy really getting whooped up on today. Financials hanging in there. Be interested to see what Mt. Doji is going to do with his position if he still has it. Real estate, big day up today. Utilities, I was looking at buying utilities yesterday because we moved higher, we moved back into the value zone, we moved sidewards. But this day needed to close above the prior day's close. I would have bought that if that would have happened, but it did not. Now it has triggered a V2, just like Verizon. But let me show you something real quick. Look at the weekly. See how Verizon in the weekly is in the channel. It's within the channel. I like that a lot better than utilities being above the channel. So that's why I would rather pick Verizon. If you have any questions after the market closes, let me know because it's an important point. But just because we're running a little low on time and I've got to start making my trades, but we'll get to that after. All right, so what do we have? We have 5 minutes. So Goldman Sachs, I guess it could close above 30, back above 70. TLT is definitely not. So I'm going to go ahead. I'm going to just lock in the loss on TLT and just get rid of that. Luckily, that was a half position. It was a counter trend trade, so I only took a half a position. That's my rule.
Order partially filled.
All right, TLT is out of the way. I'm going to go ahead lock in the profits on Goldman Sachs. I don't think it's going to close back above 70. So that was a really good trade, Goldman Sachs. Thank you, thank you.
Order filled.
All right.
Order partially filled.
All right, so we got rid of Goldman Sachs. We got rid of TLT. I'm going to go over here. Going to enter the Google position. This is a full position.
Order filled.
About the first time we've had some real tech. I mean, I guess we did have PayPal, but
order filled.
We haven't had techs for a bit. And then Verizon. That is a half position.
Order partially filled. Order filled. Order partially filled.
All right.
Order filled.
So let me just confirm here. So we're out of Goldman Sachs. We're out of TLT. We did buy Google. And then the only thing left to do is buy our SPY. Oh, and we have to check on the VIX. Doesn't look like it's going to close above. Not yet, anyway. So we do have Verizon. We got out of Goldman Sachs. We got out of TLT, and we have to buy the SPY. So go ahead. I'm going to buy the SPY position, the 10% SPY position. That's the overnight trade.
Order partially filled. Order filled.
Okay.
Order partially filled. Order filled.
All right, we got that done with 1 minute to go. So the SPY we got at 296.22. Verizon we got at 57.96. Google we got at 111.40. And then we did get out of TLT. All right, so SPY 296.22. 296.22. That is our new entry on SPY. Verizon.
Order cancelled.
And that was the market. Verizon 57.96. So we're already in the money on that one. That's nice. And then Google. We got in at
order cancelled.
All right, so we're already in the money on that one. That was good. So let's see where we ended up today. Oh, well, actually ended up with the profit today. Keep the string alive. So that's wonderful. That's really great. So, all right. Sorry, I've been talking a lot there, but that was a lot to do. Okay. So listen, if any of you have questions, please type them in the chat. I'm happy to answer them, and then I'll go over the comments that we already had. But before we get to answers, I do want to just put in a quick plug for myself. I do offer private one-on-one coaching, mentoring, and teaching lessons in the evening time via Skype. I really like to teach. I feel like I'm good at it. I've had great results with my clients. I've really turned them around from being losing traders to winning traders. So, if you feel like you could use some one-on-one attention, please reach out to me. My email is in the description of this video. You can also contact me on Twitter. And it usually starts, with just a free phone call, just to get to know each other a little bit better. I want to get an understanding of, why you got into trading, how you're currently trading, what challenges you're having, and then I can put together, a customized approach using good trading principles to fit your personality, your lifestyle, your financial situation, and hopefully get you on your way to being a profitable trader. But if it's of interest, just reach out to me by email or on Twitter. And then also, if you like this channel, if you feel like you're getting some benefit, please do me a favor. Please hit the thumbs up button. It helps grow the channel on Google and through YouTube. And there's a lot of people out there that really need help with trading. If you've been following this channel for a while, you probably, these things probably seem common sense to you now. Small losses, big wins, all the psychology we talk about, but a lot of people have no clue about this. And so I want to reach as many people as possible. So do me a favor, hit the thumbs up button, share this on social media, tell your friends about it, and help me grow the channel. I really would appreciate it. So, all right, well, let's look back at some of the comments and questions. Sorry, I was talking the whole time. I really couldn't get to them. Frederick says, if you trade a few times in a year, do you think you are still in the game, or is it better to trade a number of times per month to not lose the aspect of trading with indicators and everything? Well, that's a good question, Frederick. To me, it really comes down to the type of trading approaches you have. I mean, there's nothing wrong with just having one trading approach that you get really, really good at. But the downside of that is maybe your setup only comes around a few times a year, so what are you going to do? What are you going to do for the rest of the year? And you're right. I mean, trading, often you do kind of build muscle memory, and it does kind of keep you sharp. One thing I might add here is that, discipline is like a muscle. You have to work on it. So if you're only trading a few times a year, I'm not quite sure that your discipline muscle's in shape. So, that's the reason why I have multiple different trading approaches. And by the way, I do have a video in my playlist about, the channel introduction and lessons called My 7 Different Types of Trading Setups. And that is exactly why I made that video, so that people could see exactly all the different type of approaches I use. But the reason I use so many different approaches is for that very reason, Frederick, is so that, I'm able to trade in all sorts of different markets. But to answer your question, yes, I think you could just do that and sit on your hands and do nothing if you just want to focus on trading a few times a year. But the other side of that is that I don't think you stay as sharp. But it's a personal preference. But I mean, me, I trade almost every day. And one of the reasons I do that is to stay sharp, not just in my entries and exits and analysis, but also with my discipline. Frederick says, gold, big gap, not too dangerous for a V2. Well, it's just too high for me right here. It doesn't mean it's not going to continue up, but we're above the third ATR channel. We're at a 6876 RSI. Yeah, it's just too high for me here, Frederick. I think that's what you're asking. But yes, it is dangerous. Do the Steve Byrne books speak about SMA crossover? Which SMA crossover to look at? Yeah. If you go to the description of this video, I have a link there and the book is called Five Moving Average Crossover Systems That Beat Buy and Hold. That's an excellent book. In that book, there's only five moving average crossovers, but it's probably all you need. I mean, there's other ones, smaller ones that work, but he does talk about it in his books. I mean, and that Moving Averages 101, I also have the link down there. He talks about more than five. So, Frederick, if you haven't read that book, I would really suggest it. Five moving average systems, five moving averages that beat buy and hold, and then Moving Averages 101. Dr. Jorgensen says yes. Frederick, okay, do you have the book name? Thanks for your help. Okay, yeah, I just mentioned that. Like I said, they're down below in the description of this video. Mount Doji says, I believe it's just Moving Averages 101. Do I not have the other one down there? Five moving averages that beat buy and hold. I thought I had that one down there. But actually, if I had to, the Moving Averages 101, Frederick, is probably the better book to read, the more comprehensive book to read. And that is the book that talks about more than just the five. So, yeah, thanks, Mount Doji, for mentioning that again there, because I thought it was down there. I'll have to check. But Moving Averages 101 is really the one to start with. Frank. Hey, Frank, how you doing? Thanks for coming. Thoughts on how the VIX warning factors into your trade? That's a good question. That is a good question because I do watch the VIX quite a bit. And, we talked yesterday when Steve Burns was on the in the chat, and there was a divergence happening with VIX, meaning that we made an all-time high in the S&P, but the VIX did not make an all-time low. So that is concerning. That is a divergence, and here we did make the low. So actually now it's not a divergence, but a convergence. So yeah, I do watch the VIX. I mean, if the market is down big, but the VIX isn't up big, it gives me a bullish kind of leaning. If the market is up, but the VIX is also up, that also catches my eye. So, it's just a small part, but it is a data point that I do kind of factor in. I like to see if the VIX is confirming what the S&P is doing. So if the S&P is going up, way up, but the SPY is not really going down as much as the SPY, that gives me pause and concern, because I always look for divergences, whether they're MACD divergences or RSI divergences or the VIX SPY divergences. So but today, it did go down and make a new low, so it did confirm. So, that is actually good. Does that help, Frank? Mount Doji is holding XLF. Well, let's take a look. Oops. I would have done the same thing, Mount Doji, because, I know you bought this here. So my stop on this today, had we closed below yesterday's low, I would have gone ahead and taken profits on XLF. But do you see how we tested the low but kept above? So if I was in the XLF trade, I would have kept my trade just like you did. So good call. Mount Doji says, I've already phased out twice. Good. It almost hit my stop, but actually bounced off of it intraday during lunch. Yeah. That's why we like to trade on a closing basis, because that closing price is the most important, not what happens intraday. Frederick, Greg, when you thanks your share, do you think it helps them to move up? When I thank my shares, you mean when I say I'm grateful that it's moving up? Hey, maybe it can't hurt, right? It's better than berating them Who knows whether it does or not, but I am thankful, so I thank them. JT, hey JT, thanks for coming by. Is Roku a good example of a V1? Is it in the value zone? Move sideways for several days, bars are narrow, spike down and bounce up. Well, let's take a look. Okay, so technically this is not in the value zone. And I know this can kind of be confusing because there's two sets of channels. See the green line here, JT? Here's the green line, here's the green line. In between here is the value zone. Now, the thick line here and the thick line down here, that's the third ATR channel. So this is a value zone channel. This is a larger channel. So I like to take my trades within the majority of my trades within the value zone, which is in between the 1 and the -1. This is the third and the -3rd. So just so we're on, on the same page, JT, as far as, how we describe things. So technically, this is not in the value zone. However, it did move down. You are correct. It's still within the third and the -3rd ATR channel. So that's something, but you're right. It did move down. You are 100% correct. It is starting to move sidewards, which is good. I like it within here, but generally that's good, especially because it's within the third ATR channel still. So yes, we move down, we move sidewards. Absolutely 100% this is a V1. It's not a bad trade. I mean, it's not a bad setup at all. And yes, you can see during the day at the low, it got close to the 50 RSI and the 50 moving average and the third ATR channel. The only thing that would concern me about taking this trade, JT, is that, do you see how we're at a 47.80 RSI? I would feel a lot better if this closed above 50, because then I know I have some support underneath me at the 50 RSI. Right here, I would look at this trade as possibly having that 50 RSI resistance above it. So if this formation happened within the channel and it closed back like above the 50, I would love this trade. But really good eye, JT. I mean, you're getting it. Make a higher high. Come down, move sidewards, spike down, reverse. Yes, it is a V1 for sure, 100%. It's just that I wouldn't personally take this because it's a 47 RSI. So I have the 50 RSI above and I have the moving averages above me as well. So I hope that helps. Let me know, JT, if you have any other questions on that, if I answer that clearly for you. But really good eye picking that out. See, once you start seeing that pattern, once you start seeing the move up, move down, sideward, spike down, reverse, I'm telling you, that is really going to help your trading. But then you have to add the finer points on, like, is it within the channel? What's the RSI doing? See what I mean? Thanks, Dr. Jorgensen. I will have a good hike. Hope you have a good day golfing. Mount Doji says, I'd say the more trades, the better. Yeah, I agree. Just like if you want to be a golfer, going out and golfing a lot helps. But don't take trades just to take trades. Remember, they have to be good trades. They have to be legitimate trades too. So there's a fine line between that statement, right? Frederick says, thank you for your point of view. Frank says, yes, thank you. Okay, good. Mount Doji says, took some real discipline not to trade intraday. A few XLF banks were downgraded, but I had to stick to my guns. That's right. And let's go back to Mr. Goldstein saying, sit around and do nothing when everything screams at you to do something. That's exactly what you were doing. Everything in your mind was screaming to get out intraday, but that wasn't your system. Your system was waiting until the end of the day because you know those prices are the most valid prices, right? Frederick says, how long it takes you to screen your stock list when you do not live stream? Well, I'll tell you, honestly, before I started the live stream, I mean, I could screen my stock list in probably 10 minutes because I don't have to explain it, right? I just after a while, when you do this for so many years like I have, you can literally look at the chart and not really be able to put it into words or really look details, but you just know if it looks right or not. I mean, here on the live stream, I try to explain it, go down, every little thing. But if it were just me, maybe 10 minutes. But, I watched the market for about 2-3 hours before the live stream, to get ready and to take a look at things. But I think the live stream does help, honestly, because, when I said it takes me 10 minutes, I do that quickly. But during the live stream, when I explain everything, very detailed, it helps me with my trading too. I actually catch things that I wouldn't without the live stream because I would go through it so fast. Mount Doji says, can you share what price XLF is at RSI? Yeah. Now remember, this will be for tomorrow, Mount Doji. I can do it on the current day or the next day. So, this is why I like Trade Navigator. I've been using this for over 20 years. And the reason I do it is this one tool called the What If tool. So tomorrow, let's take a look. So let's go up and see where the 70 RSI would be tomorrow. I know Bruce just signed up for Trade Navigator. It is really good. I mean, you do pay for it, but if you get to the point where you become a serious trader, I really like it. Okay, so tomorrow, Mount Doji. Oops, crap. Tomorrow, the 70 RSI is going to be at 28.26. So yeah, watch that price tomorrow, Mount Doji. If we get over 28.26 and then close back below, if it were my trade, that is where I would exit. If it gets above 28.26 and holds above, then just keep it, right? And you're welcome to ask me each day what the 70 RSI is going to be. Hopefully that will be helpful. Yeah, so 28.26. Hey, you're welcome, JT. Good seeing you. Thank you for coming by. And if you have any other questions in the future, just let me know. But it is encouraging to see that you're kind of internalizing that pattern. It's a really good one. Frederick says, could just have a quick look at the charts. Yes. All right, so here's a chart that Frederick sent me. So I don't quite like this chart. I'll tell you why. Here we have this big down move. Here we rally to about 50% of this move. Generally, you're going to find some resistance at this halfway move. But, yes, technically it's a V1. This bar did go below the previous day, but not by much. Remember, we need at least a quarter ATR washout. We really need to see that the prices were tested and rejected. This is literally a penny or so below, so it's not enough. Yes, it did close above the close, giving us a V1. I don't particularly like that it closed back in the halfway bar because it got sold into in this move. But on the other hand, it did close about halfway of the bar. So, but I certainly don't like this big bar way back then. When you have this is technically a higher low V2. Ideally, I'd like to see this come down, move up, move down for a couple days, and then V1, V2. This just kind of went down, up, sideways in the smallest amount of V1. So I don't really like that trade so much, Frederick. So really look for those washouts. They have to be more than 1/4 of an ATR. So I hope that helps, buddy. Mount Doji says, I'm going to Twitter DM you my post-it note from today. Haha, it's pretty funny with different tickers. Okay, sounds good. Do it. Hey, Ramble Ron, how you doing? Ramble says, have you improved your trading since you started the live stream? Have you noticed an improvement? I gotta say, I have. And what I talked about before, where I go through each chart one by one, slowly describe everything that I'm seeing, speaking it out loud, I do find small nuances that if it were just me and I was just ripping down through them, that I wouldn't catch. So yeah, speaking them out loud, saying everything out loud that you see, does make me catch things. And I got to be honest with you too. I like to trade at the end of the day, but I don't always do that. And before the live stream, a lot of the times I may make my trades with a half hour ago or 20 minutes ago. But because the live stream, because I'm speaking the whole time, I literally don't have the time to do that. Right. And it's been a good thing because, the prices near the close of the day are the most important. They really are. But, for years and years and years, you sit here by yourself or you have a trading partner and there's nothing to do. And so sometimes you kind of get those itchy fingers, right? So no, I think the live stream has really helped. One, I speak all the charts out loud slowly so that I can explain to you guys what's going on. That's a help. And the other help is I'm so busy during the last hours, I don't have any time or inclination or desire or temptation to get bored and do a trade that I'm not supposed to do, just like we just talked about with Mount Doji. So yes, it has. And yes, it has in profits as well. I got to be honest. That's why I'm saying, guys, because I have learned this doing this here on this live stream, you can set up a little YouTube channel. You don't have to go live, but if you kind of copy what we do here, where you record it for yourself, because then you have a nice trading diary, video trading diary for yourself. But if you went through and actually go through each chart, explain it out loud, like I said, you don't have to live stream, you can just privately record it. It's a good exercise. And then you can go back and listen to yourself, and it puts some good perspective on. So I would seriously recommend it for everyone doing this. Because now, and then you have a trading diary. I mean, I have 3 months of a trading diary. I can go back to any day, look exactly what I was thinking, where I entered the trade. It's great to have a trading diary. So I would recommend it, everyone. Frederick says, I see. Yes, very much. I always miss to look at all the details. I know, and that comes with practice, but, do look at the details. Really do look at the details. Has to move up, has to move down, has to go sideways for a couple Dows, has to wash out for at least one ATR. Then it has to trigger. But when it triggers, is it check your RSI, check your did it gap, So it's the small details that really matter. When I was studying with Kerry Lavorne, who taught me the V1s and V2s, we talked about trade selection. I said, if I have 2, 3, 4 possibilities, we were talking about the best way to narrow that down. He's like, Greg, if you're doing this right, this was years ago, but he said, if you're doing this right, you're not going to have 4, 5, or 6 possible entries at the end of the day. He says a good V1, V2, there's not enough good ones for you to get 3 or 4 every day. You're lucky if you might really get a great one once every 2 or 3 days. So I hope that puts it in perspective. All right. Well, listen, thank you everybody for coming by. Thanks for the great questions. Hope the answers were helpful. Go out and do something nice for somebody today. Just hold the door open, give them a wave, give them a smile. Say something nice. It's free. It really may make a difference in their day. So We will be here tomorrow at during the last hour of the market, and hopefully you can make it. If you have any other questions that I didn't answer today, please just email them. My email's in the description, or you can send them to me on Twitter. So, all right. Well, thanks again, everybody. Hope you have a good rest of your day, and hopefully talk to you tomorrow. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.